Hello students, I am Dr. Manish Puntambekar from the Department of Management, the Bhopal School of Social Sciences. Today I am just going to explain you the meaning and procedure of preparing bank reconciliation statement. So students, today we will understand the meaning and concept of bank reconciliation statement. As far as this bank reconciliation statement is concerned, this bank reconciliation statement is prepared by the business entity only, means the owner of the business or the proprietor always prepares this bank reconciliation statement. Then the purpose of preparing is to reconcile or match the bank balance as per the cash book and the passbook, because sometimes it is quite possible to have some differences between both the balances, means between the balances of both the books, that is cash book and passbook. So we have to prepare here this bank reconciliation statement so that we can reconcile the distinction between the balances of cash book and passbook. Then third point is it finds out the differences between the balances of cash book and passbook and nullify them. This is not only the purpose of preparing this statement is to find out only the balances, but we will have to nullify the difference also by doing some adjustments. Here we will just talk about this cash book versus passbook. The first point says the cash book is prepared by the business entity. The passbook or bank statement is prepared by the bank to have a record of the customer's banking transactions. So this passbook is always maintained by the bank. Third point is cash book always shows debit balance, that is positive balance. Whenever we'll just start from the balance of cash book, we will always take into consideration the cash balance, that is always positive balance. As far as the passbook is concerned, it always shows the credit balance, that is also positive balance. Now students, the features of bank reconciliation statement. The first feature is what? It is just a statement, not an account. Generally we prepare account in the T shape, that is debit and credit, but this is always prepared in the form of statement, which is not an account. Then second is it is not a part of journal or ledger. Actually this is not the part of accounting and bookkeeping process. This is only prepared by the businessman on a particular day. Then third part, it is prepared for a particular day, not for a period. Unlike accounting, accounts are prepared for the year, that is for the particular period, 6 months, 1 year. But this bank reconciliation statement is never prepared for the particular year. Actually, it is always prepared for a particular day. It is prepared at regular intervals, say every month, 3 months, 6 months, that ultimately depends upon circumstances. It is prepared by a person who has an account with the bank. A bank does not prepare it because this is not the work of bank. Actually, it is always prepared in the books of the businessman, the proprietor. Therefore, only accountant prepares this bank reconciliation statement. It explains the causes of disagreement between bank statement and cash book. Actually, the differences between cash book and passbook, actually, this bank reconciliation statement rectifies. Now, the importance. It is very important to prepare bank reconciliation statement by any concern. The first importance is it assists to cause of differences between cash and passbook balances, means this shows the differences and the causes and reasons behind those differences and how to rectify those differences between the balances of cash book and passbook. Second is it assists to calculate the actual bank balance, because through the help of this bank reconciliation statement we can only come to know the actual passbook balance or bank balance. Third point, it assists to find out mistakes committed in cash book and in passbook. Then it shows the transactions not recorded either by cash book or passbook. Sometimes it is quite possible that some of the transactions may or may not be recorded either in cash book or passbook. So due to that particular error, it is quite possible to have some differences between the balances of cash book and passbook. So this is the fourth point. And then fifth point is it assists to maintain the healthy relation between banks and its customers. Now we will discuss the reasons of differences between both the books. There are mainly two reasons of differences. First is timing differences, that is difference due to different treatments in cash book and passbook. And second is other differences in which difference due to errors in cash book which has been committed by the accountant. Now students, we will understand the examples of timing differences. Here timing differences, first example is checks deposited but not cleared by bank. Before depositing these checks in the bank, we must have received those checks from our debtors, from our customers. So after receiving those checks from our customers, we must have debited those checks in our cash book. After debiting those checks in our cash book, we must have deposited these checks in the bank, but wrongly, bank has not cleared those checks yet. So this is one of the examples of timing difference. Second, checks issued but not presented for payment. It means we have issued these checks in the name of our creditors. After issuing these checks in our business, already we have credited our cash book by the proportionate amount, but these checks have not been presented by our creditors in the bank. Therefore, bank has not debited this account from our account. So ultimately, in comparison with our cash book, our passbook or bank account has wrongly been increased. Next point is bank charges and interest debited or credited in bank account. Sometimes bank directly credits or debit the amount of interest and bank charges from our account, but this information may be sent after some time. Therefore, this is also one of the most important reasons to have some differences between both the balances of cash book and passbook. Direct payment and direct receipt by bank. It means direct payment if suppose some amount has been debited directly from our passbook, so it will reduce our passbook, and just opposite of it, if suppose some amount has been deposited by bank in our account directly, so this amount will increase our passbook balance, but both these payments and receipts have not been recorded in the cash book. Therefore, there will be clearly difference between the balances of both the books. In other differences, the first difference is transactions not recorded or recorded twice in cash book. Sometimes some transactions may not be recorded, or sometimes these transactions may be recorded 2 times, 3 times in the cash book. So this will be also one of the other differences between both the books balances. And then any other clerical mistakes, that is either wrong amount or wrong casting etc. in the cash book. So these two other differences are also there. Now students, we will try to understand how to prepare bank reconciliation statement through some practical example. Here the first case is when opening balance is debit, that is favorable balance as per cash book. It means here we have been given positive balance of our cash book, that is called debit balance of cash book. Let's understand this question. In this question, bank column of cash book, actually we are just talking about only cash book, but cash book's bank column is showing a debit balance of rupees 49,000 on 30th June 2017. Bank statement or passbook showed credit balance of rupees 37,400. This is being shown by our bank passbook. That is also positive balance, and this 49,000 is also positive balance. So both the balance are being shown by our cash book and passbook respectively. Entries in the cash book and passbook were compared and following differences were noticed. The first difference is what? Checks of Sham rupees 9,000 and of Mohan rupees 15,000 were deposited but not collected up to 30th June 2017. It means we have actually deposited these checks of both the debtors named Sham and Mohan worth rupees 9,000 and rupees 15,000 respectively, and already we have just received these checks from our debtors and we have deposited these checks in the bank, but these checks have not been collected or credited up to 30th June 2017. When we have received these checks from both the debtors, we must have increased our cash book, but our passbook has not been increased by our bank. So in comparison with cash book and passbook, our passbook has been wrongly reduced and cash book has wrongly been increased. Like in the second transaction, Ramesh, a debtor, deposited a check of rupees 8,000 directly into the bank. It means Mr. Ramesh is one of the debtors of us and he is directly depositing this 8,000 rupees worth of check in our account. So our account means our passbook is being increased here. In the third transaction, bank allowed interest of rupees 500. Bank is just going to allow us rupees 500 as interest, so it is one of the incomes of us. So bank will credit directly our passbook with this 500 rupees, but this information has not been sent by the bank to us. Therefore, we have not increased our cash book proportionately. So there will be a difference between cash book and passbook. Okay. Then fourth point is check for rupees 10,000 issued to Radhesham was not presented for payment. We have issued a check worth rupees 10,000 to one of the creditors of us, Mr. Radhesham, but it has not been presented so far by Mr. Radhesham in our account. So ultimately, bank has not paid this 10,000 rupees. Bank has not debited this 10,000 rupees from our account. So ultimately, our account is showing that old balance. So in comparison of cash book, our passbook has wrongly been increased. Now, next point. Bank debited the account by rupees 6,000 being insurance premium paid as per standing instructions. We have instructed our banker to pay on behalf of us rupees 6,000 to insurance company as premium. So bank has directly debited this amount from our account. So our passbook has been reduced and we did not record this transaction in our cash book. Therefore, our cash book has wrongly been increased in comparison with this passbook. Then sixth point is bank debited the account by rupees 100 being bank charges. Actually this is our expense and bank is charging rupees 100 and this 100 rupees has been debited by bank from our account. So our account has been reduced in comparison with the cash book. Here it has been asked, we are required to prepare your bank reconciliation statement as on 30th June 2017. Now, we will prepare your bank reconciliation statement so that we can reconcile the differences between both the books, that is cash book and passbook. So students, this is bank reconciliation statement in which the first column is particulars, second column is for amounts in detail, and finally the net amount will be shown in the last column. So there will be three columns: particulars, amount details and amount, that is net amount. as we know, balance as per cash book is already given worth rupees 49,000. This 49,000 is the debit balance, that is positive balance of our cash book. After this, understanding this balance as per cash book, that is positive balance, now some transactions, some adjustment will be added over there. The first transaction is checks directly deposited by Ramesh. Mr. Ramesh is one of the debtors of us and he has directly deposited this 8,000 rupees in our account. So our cash book has been reduced in comparison of our passbook, because passbook is having the entry of this 8,000 credit, but we did not debit this 8,000 rupees in our cash book. Therefore, our passbook has wrongly been increased with comparison of cash book. Then interest allowed by bank. It is one of the incomes of us because this interest has been allowed by bank on deposits. So this 500, due to this interest allowed by bank, our passbook has wrongly been increased in comparison with the cash book. Then checks issued but not presented for payment. These checks worth rupees 10,000. Actually, we are just going to issue in favor of one of the creditors of us, but those creditors or that particular creditor has not presented this amount of 10,000 rupees worth of checks in our account. So bank has not paid this 10,000 rupees. So our bank account is showing the old balance, that is increased balance, wrongly increased, right? Some items have to be deducted. First, checks deposited but not yet cleared. So actually we are just going to deposit these checks. Why we are depositing these checks? Because we must have received these checks from our debtors. So these two persons, namely Mr. Shyam and Mr. Mohan, we have received these two checks of rupees 9,000 and 15,000 rupees respectively from Mr. Shyam and from Mr. Mohan. So total 24,000 rupees worth of checks we have received, and already after receiving, immediately we must have debited both these checks in the bank, means in our cash book bank column. But actually these checks we have deposited also, but the amount has not been cleared. It means bank has not credited this amount in our account. Therefore, our cash book has wrongly been increased by 24,000 rupees here. Then insurance premium paid by the bank. On our standing instructions, bank is paying insurance premium of rupees 6,000 on our behalf. So ultimately our passbook will reduce by rupees 6,000. Then bank charges debited. Here bank is just going to charge here 100 rupees from our account. So ultimately our passbook will reduce by 100 rupees. So there is a total difference of rupees 30,000 due to these transactions, and therefore these transactions will be deducted, and finally we will find out here total 37,400 rupees. This is balance as per passbook, because at the top this cash book balance is given. So finally in the bottom we will find out here passbook balance. So these are the balances according to cash book and passbook respectively. So students, now we'll understand here case number 2. When opening balance is credit, that is overdraft, it is called unfavorable, that is not favorable, means it is negative balance as per cash book. We will understand this negative balance or overdraft as per cash book from this example number 2. Prepare bank reconciliation statement as on 31st March 2018 from the following particulars. These particulars have already been given over there. The first, overdraft balance as per cash book as on 31st March 2018 is rupees 1,80,000. This is negative balance as per cash book is given. Then second is overdraft balance as per bank statement. So this 2,13,900 rupees, it is given negative balance as per bank passbook. This is also called overdraft balance. Then checks deposited into bank but not entry passed in the cash book. It means we are just going to deposit these checks in the bank because we must have received these checks from our debtors, but these checks have not been cleared in our account, whatever the reason may be. But ultimately, these checks worth rupees 3000 have not been deposited or cleared or credited in our account. Fourth point is checks received and entered into the cash book but not sent to the bank. Here we have received these some checks worth rupees 10,000. We have also entered these checks in our cash book also, but we did not send these checks in the bank. It means we did not deposited these checks in the bank, right? Then next is credit side of the bank column casted short. Credit side of the bank column, it means it is our receipt side, and we are just going to reduce this 1000 wrongly of our receipts. Then next point, insurance premium paid directly by the bank under standing instructions. These are our standing instructions to our banker that please pay this 5,000 rupees worth of insurance premium on behalf of us to that particular insurance company. Bank charges entered in the cash book twice. Here bank charges of rupees 100, but we have entered these bank charges twice in our cash book. It means it has reduced our cash book proportionately by rupees 100. We should have recorded only 100 rupees, but wrongly we have recorded 200 rupees in our cash book. Then checks received returned by the bank but no entry passed. We have received a check from our debtors. These checks have been deposited in the bank also, but bank has returned these checks because these checks have been dishonored. Okay. Ninth point is checks issued return on technical grounds. We have issued some checks worth rupees 3000. It means to our some of the creditors, in favor of our creditors, we are just going to issue some checks worth rupees 3000. Those checks after issuing we have already recorded in our cash book, but those checks of rupees 3000 returned on technical grounds. It means those creditors have already presented these checks in the bank, but bank has not paid this 3000 rupees from our account. So ultimately our account, that is passbook, has wrongly been increased with the cash book balance in comparison with cash book balance. Next is bills discounted dishonored. Actually 40,000 rupees worth of bills which we have got discounted from the bank, but these bills discounted have been dishonored. So ultimately our passbook will be reduced in comparison with our cash book because bank will not record this amount of rupees 40,000. Bank will not credit this amount in our account. And finally, 11th point is bills receivable directly collected by the bank. It means the amount of this bill which has already been those bills which have already been sent to the bank by us, actually to collect those checks or those bills in favor of us directly in our account. Bank has done that thing. That instructions have been followed by bank. So bills receivable directly collected by bank, it means the amount of 20,000 of bills receivable directly credited by the bank in our account. So these are some points. So now we are just going to show all these points in the bank reconciliation statement. So now we will try to understand this bank reconciliation statement, in which this overdraft as per cash book, that is called credit balance of cash book, is given already, that is 1,80,000 rupees. This 1,80,000 is what? This is our negative balance of cash book. Now some items we will add there, like checks received and recorded in the cash book but not sent to the bank. It means we are receiving some checks from our debtors. We have recorded in our cash book also, but these checks have not been sent into the bank, means we did not send these checks in the bank though. So ultimately bank has not credited the amount of these checks worth rupees 10,000 in our account. So our account has wrongly been reduced. I am just talking about bank account. But as far as cash book is concerned, we must have increased our cash book by rupees 10,000 because we have received these checks from our debtors. Second, credit side of the bank column casted short. Whenever credit side of our bank column will be casted short, so it will always be added in this bank reconciliation statement. Insurance premium paid directly by the bank. Insurance premium is one of the expenses of us which is being paid by our bank on behalf of us on our standing instructions. So bank has paid this 5,000 rupees directly from our account, but we don't know whether bank has paid or not because we have not recorded the entry of this 5,000 in our cash book. Therefore, what is the result of this transaction? Our cash book has wrongly been increased by rupees 5,000. Checks received returned by the bank. It means these checks have not been credited by the bank in our account. So our cash book has wrongly been increased. And finally, bills discounted, dishonored. So actually, those bills which we have already recorded in the cash, that is called bills receivable for us, but bank has not cleared the amount of rupees 40,000 in our account because those bills have been proven as dishonored. So these items worth rupees 60,000 will be added in this balance. And finally, some items which will we discuss now. First is checks deposited into bank but no entry was passed in the cash book. We are going to deposit these checks in the bank, but we did not pass any entry in our cash book. It means we have received those checks from our debtors. We have deposited those checks in the bank also, but unfortunately we missed these checks to be recorded in our cash book. We did not record these checks in the cash book. Therefore, our passbook has been increased and cash book has been reduced. So this amount of rupees 3,000 will be deducted from this bank reconciliation statement. Then bank charges entered twice in the cash book. Bank charges, we are just going to enter in cash book double charges, means we should have recorded only 100 rupees in our bank in our cash book, but wrongly we have recorded 200 rupees in our cash book. It means our cash book has wrongly been reduced by 100 rupees. So we will have to increase our cash book and reduce our passbook. Then checks issued returned on technical grounds. Some checks we have issued, so already we have already we have credited our cash book, we have reduced our cash book proportionately, but bank has returned these checks, means bank did not pay this amount of rupees 3,000 against those checks. So ultimately these checks will be returned by the bank. So our passbook will show increased balance proportionately. And finally, bills receivables directly collected by the bank. So this 20,000 rupees worth of bills receivable has been collected or credited by our bank. So our bank account has wrongly been, actually not wrongly, it has correctly been increased, but we did not record these bills receivable in our cash book. Therefore, total amount of rupees this 20,000 will be deducted. Why? Because this balance is given, this is not positive balance, this is negative balance. Therefore, all these items will be subtracted and these items will be added in this bank reconciliation statement, so that we can just find out the overdraft as per bank statement. We can say this is the debit balance of our passbook. Thank you.